Hey, everybody. Welcome once again to Hard Money. Darren Long is here. John Scholes along with you as well, reaching out anytime. It is deltaharbor.com. That is Harbor with a U because it is all about you. And the phone number anytime you can reach out there as well. That's 1-888-335-8645. Darren, how are you, pal? Good to see you again.
Good to see you, Johnny. I'm well. It was a good week, steady week, and lots of news to talk about. The budget came down.
Oh,
Got wave 3 COVID. We'll touch base on that today because that's impacting the real estate market in the short term. Got a couple of announcements with respect to experts coming on the show in the next couple of weeks.
come on. No, good stuff.
Delve into some other hard assets and talk more about the other various things that are on the table as far as hard assets investments are concerned. And overall, it's a great week. So good to be here. Got a little sunlight today as we tape. We're through this snow, hopefully. And so I don't know about you, buddy, but I'm ready for spring. Bring it on.
Man, can't wait to get on my bike fast enough and start riding. But a little bit of an update. We always start with Darren. How's gold and silver looking? How are the markets overall?
The week finished strong, Johnny. We actually came out of a little bit of a lull midweek. And again, I was hoping it would last because this buying frenzy has picked up over the last month. As we said last week on the show, we had our biggest week in gold in the entire history of our firm. So it was an exciting week, 401 ounces of gold. And it's just that people are waking up and it's becoming more of a mainstream thing. People are balancing. They're looking at where they're heading. They're seeing this economy is getting overheated in some respects and in other respects just getting going. We're going to talk supercycle today too. Commodities are going to be restarting, history repeating itself. But as the week that was, gold is hovering in around the 1800 range. It's trying to get there, John. It's very close, but it hasn't breached it and stayed above it yet. But we're expecting it to this coming week and into the week following. And silver hovering precariously close to around 2630 as we tape the show here on Friday.
Yeah, again, a reminder for everybody listening, you want to reach out to Delta Harbour. We're talking hard assets here, among other things, gold and silver, physical assets. It's not paper. It's not hypothecated stuff. It's real stuff you can hold, you can store, you can keep it at home, and you can start collecting and making money in this way to hedge your other investments, make it part of your portfolio as well, deltaharbor.com. Okay, let's get into it. You want to keep going down that road, or you want to talk a bit about this budget that dropped a few days ago?
Well, the budget's a big thing, John, because it obviously impacts the way we make decisions. And although we were saying before the show started that in the grand scheme of things, Canada means very little in terms of precious metals. In the grand scheme of things, we rank very low. In fact, we're around 100th in terms of countries that actually hold physical metals, which, I mean, it seems ridiculous. To me, it is. I mean, to many of my colleagues, it is. Most of the businesses that operate in the commodity space can't believe it when we have access to as much land and geography as we do, as much resources we do, that we don't own physical gold as a country. But that's the shape the Liberals want. That's Trudeau's plan. He decided to sell off the last bit of gold that we have. And he did that when the price of gold was at, round about $1,200. It's now around $1,800, and it's been as high as 2,000. It's going much higher. So as an asset, it would have made our country money, but we didn't pay attention. So here we go. We have the budget this week, and it took 2 bloody years to create this budget. First off, it's unacceptable. 720 pages of blah, blah, blah. And in all honesty, I wrote about it this week, and truth be told, as far as metals are concerned, it couldn't be better. We are going down the spending path. The Liberals are addicted to spending. And this was a whole lot of spending money that has to be printed and borrowed, and it did not include a roadmap for success, a path out of this situation we find ourselves currently in. And they are taking debt levels to historic highs, John. In fact, Trudeau just made an all-time high. He currently holds the record for having created more debt than the previous 22 prime ministers combined.
Wow. Well, you got to be good at something. Do you think the backdrop of this partly is COVID and the pandemic? I mean, it's got to play.
It is certainly. As a nation, we've decided we are going to take the social approach, which is to take care of our citizens, to pad everyone's income to make sure that there's a recipe for taking care of those that can't. And those are all things that I agree with for people that don't need it. Problem is it's bled over and been used and abused by people that shouldn't have had these things. And we spent a ton of money, $354 billion and 108 billion in new spending. So to think that this isn't impactful in terms of where our economy is heading, it's hugely impactful. The rest of the world is watching. They're watching very closely. They're examining Canada with a fine-tooth comb. They are certainly paying attention to where our dollar is. They're paying attention to where our export imports are, and they're watching for cracks in the armor. And we're going to talk about real estate this week because there has been, believe it or not, as hot as the market is, Johnny, the immediate information that we have on real estate tells us that there is, at least over the last 4 or 5 days, tremendous concerns. There has been a slowdown. Talked to 3 brokers prior to today's show, which we'll touch on in a little while. But overall, the budget is a huge problem for me. Personally, I think that we are going to definitely see Liberals continue down this path. They want votes, and they're going to spend to get them. And that's exactly what it's going to do. We have no new taxes. We didn't see a hike in HST. We didn't see a hike in any type of new major corporate initiatives. We didn't see a hike in anything other than meaningless stuff that was already on the table. So we're going to tax the people who want to buy yachts a little more. We're going to tax the people who want to buy luxury items a little bit further. But there's nothing that's been put down on paper that would seriously help me to change my opinion about where we're heading. You have to protect your wealth now, and you got to use it with assets, hard assets like gold and silver, to do that.
You know, it seems like it's going to be one of those budgets in years to come where it's like, you know, your great grandchildren are going to be responsible to take care of this. It's going to be long after you and I are gone, but that's not a good sign either, right?
Well, that's just the problem that I think that's more of a problem because a lot of people that come to us at Delta are planning for the future. They're saying, what can I do to put aside for the next generation something that's meaningful, something that will transform wealth, something that will protect wealth, something that will grow wealth, an insurance policy. And gold and silver have represented that for thousands of years. Yeah. And if we look more recently at the scale of people participating in the market, volumes are way up on the physical gold and silver market. There's been a huge jump in demand. There's been a lull in available product. It's telling us that people either A, are finding out more about gold and silver, which is probably not the case because nobody's advertising it. I mean, there's companies like Delta and a few others, or B, the fact is that people are becoming aware that they need to protect their wealth and do a better job of it. So as far as our children and their children and their children are concerned, I say it's the better part, after talking to a couple of colleagues this week, of 30 years before 20 to 30 years before we can get this calmed down and under control. I mean, in 4 years from now, we'll still be looking at $31 billion a year in interest payments alone. And that's assuming that the interest rates don't go crazy, which I think they are going to rise and they're going to go up higher than they've been in the last 2 decades. So this is a very important time for wealth, and to make certain that you have something that protects you is probably the key ingredient to moving forward. It's not a call out to say, you know, dump your stocks, dump your bonds, dump your cash. It's to say balance. It's to say have diversification right now. I'm not even sure real estate is going to give you that. It's so precariously perched on a peak right now that, you know, it's starting to crumble slowly. So I'm concerned, and I do have those concerns, and I've had them before. I had these concerns early on in the 2000s, and lo and behold, the dot-com bubble burst. The stock market was slaughtered, and by 2002, we had started a new commodity supercycle. So your children will be paying, my children will be paying, their children's children will be paying for this to live in the here and now. And unfortunately, you don't have many choices. New home buyers are either going to choose to move to Elliott Lake and become, you know, and raise elk for a living, or they're going to rent. And even rent is going to be difficult to handle because the cost of that is going to be astronomical as well.
It is deltaharbor.com. You want to reach out anytime to Darren, and 1-888-335-8645. We'll take a quick break. Lots more to go here on Hard Money on News Talk Sauga 960. Hey, welcome back to Hard Money. Lots more to get through here. Darren Long, of course, on the other microphone. And we're going to talk to you for the remainder of the hour about, your wealth, increasing your wealth, adjusting your portfolio to make sense in the coming years to come. It's really important stuff. By the way, you want to reach out any time to talk to Darren or his colleague about getting some of these hard assets into your portfolio. DeltaHarbor.com. That's Harbor with a U. And 1-888-335-8645. Okay, brother, let's keep going. Where are we going now?
Well, listen, the conclusion from last week's budget is important because essentially what it tells us is that for the short term, the housing market runs hotter. We definitely see signs that it's cooling in some respects because in talking to a couple of brokers before I came to the show this week, they're telling me listings are down, viewings are down. Now, that's not necessarily because we believe the housing market is about to implode. It has to do with the fact that there are more travel restrictions, so people can't come from out of province. There are going to be a lot of concerns about the possibility of how long this third wave of COVID is going to be. So that's going to put a damper on things. And spring certainly means that you're going to see more listings come to the market because people are in that mood to get out of their house, get into a new one, and they want to do it while the warm weather is here. So those things are all playing a role. We're watching very carefully. But as far as the budget is concerned in gold and silver, I think that your financial portfolio continues to grow fatter if you make good decisions. I think you stay the course. You just diversify a little further. The wealth divide here is going to get bigger, and the vote buying from the Liberals is basically gone vertical. And it won't be long now. I think that what happens to gold and silver in the next 24 to 36 months is going to blow everyone away. I don't think that you're going to get a better opportunity with a more undervalued group of assets than gold and silver. And if you're listening to this show, I mean, even just going over to the website and saying, hey, I'll take a 30-minute consultation, or I'll just call Delta and get some information. Yeah. It's the key ingredient to being successful. You got to have the knowledge, but you have to have the action. And in gold and silver, we've got two assets, especially in silver, as you well know, John, my favorite metal in the entire world, that help you as an investor to diversify and stay diversified, because this is the moment where this is going to keep venturing into the unknown. We're in a very, very new place. I don't know how much longer the stock market goes up. Interest rates have to start rising. The bond market's telling us that that's going to happen. And listen, if we want to make wealth, we want to generate wealth for ourselves, there's only a handful of ways to do it. One of the best things you can do is to have tangible assets, hold in your hand. John, our assets in gold and silver, these aren't paper assets. We don't deal in futures or options on futures. We don't even deal in ETF stocks, none of that. Although we talk about it all the time, and I touch on it in all my writing, there is ultimately no paper in this office whatsoever. We deal only in the physical assets. So if you want to take it home, or if you want to put it into storage, or if you want to put it into your RSP, TFSA, we can help do that at Delta Harbour, and it's easy to do. If it's a matter of just designing a budget that suits your needs, deciding whether or not you want gold or silver, and then deciding where best it's going to be used. In addition to all of this, John, we've got ways to keep premiums lower. We have a bulk bullion account, which basically allows a client to own physical silver and gold, but keep focus on what the long-term goal is, which is maybe not to own the physical gold and silver at home because they don't want that security risk. Maybe they don't want those high premiums, so they keep it in storage and they're able to buy and sell it. And all of our products are completely liquid. If you take it home, it's just a matter of bringing it back to our office and we'll cut you a check there. If it's in the vault and it's being stored, it's a phone call. It's as simple as just picking up the phone, making the decision to buy or sell, and then once the product has been sold, we put you on hold, we get a price, and then we deliver that back to you. But as far as this budget is concerned, John, our debt levels are way too high, and we're very close to seeing a very big portion of Canadians, unfortunately, despite all the efforts that the federal government has made to spend to oblivion, there is a big chunk of Canadians who are only in the hundreds of dollars away from insolvency. So we have to plan accordingly. We have to see what lies ahead. The road for gold and silver is extremely lucrative right now, and it's very undervalued. So buying at this point in time means you're not buying into a market which is oversold, or in terms of how many people have been participating. You're buying into a market that's relatively new, and that is on a new super cycle, history repeating itself. Opportunity knocks.
And again, 1-888-335-8645 to take advantage. Talk to Darren or a member of his team and get it happening. Get that portfolio of hard assets going for yourself or a family member, for your kids for that matter. DeltaHarbor.com. That's Harbor with a U. I know we talk about the fact that you specialize and only handle physical assets. We know that. I've known that for years dealing with you. But what is the problem, just to go a little bit sideways for a sec, what is the problem, the issue with paper gold and silver, which is a lot of people just do it that way, right? They just go with the paper.
Sure, absolutely. And I think the first problem is people don't typically understand well enough what it is they're investing in. So they may think they're owning gold or silver, but in fact, what they're doing is buying a company. So if I wanted to buy, Barrick Gold or Silver Wheaton or any number of mining companies, I'm buying the company. I'm buying their ability to manage their company well, to create and develop a story and a piece of property that will pull product from that geography. And in the gold industry, it's 1 in 1,000. So 1 in every 1,000 opportunities, stories, new deals, new companies actually hit product. And of that, just a small percentage actually develop into a real gold mining operation. So we don't buy that kind of thing here. We don't offer that to our clients. And then on top of that, the next thing that people do is they say, okay, well, I don't want to buy a mining stock because I understand I'm buying the company. So they go ahead and they buy an ETF, which is an exchange traded fund, like the SLV or the GLD. And there are many others, but they think that they're getting gold and silver. And again, they don't own gold and silver. If they want to take delivery of that product, they have to convert their shares, and they have to do so in very large baskets of either gold or silver, which cost, in many cases, hundreds of thousands of dollars for them to do it. So if I'm just a small investor who put 10,000 into the market, and I'm just kind of holding a position because I want gold or silver in my portfolio, I'll never ever actually hold that physical product. So those are ETFs, and again, they're just promises until we see the product or touch the product, in which case we don't. The largest ETFs, the GLD and the SLV, do not readily make available their product inventory. They do not allow you to go to the vault. They do not allow you to see the product. And we do. That's the difference. And if you want to have exposure to actual real physical metal, that's how you do it. You take delivery of it. You put it in your safe deposit box. You store it with us. We'll put it in the vault in your name, where you can go and see your product, tell people about it, and share that experience with people, and know full well that you actually own the physical bar or coin of gold and silver.
Yeah, I don't want to buy into a running shoe company. I want running shoes on my feet. I want the physical thing. Like I just don't understand that whole paper asset. And it's not as easy for somebody owning that to get a hold of it and liquefy it if they want to. You said it's a phone call. If I want to cash in my gold or get more gold from you, put it in my vault, in my holdings, it's really easy to do. I can see paper being a bit of a runaround. That's
it. And again, ultimately, you have to make the decision that's best for you. Right. If the market closes and you don't have your product, or if the exchange closes and you don't have the ability to buy and sell, you're out of luck. So why not own the physical? If you want gold and silver, own the physical and buy it through Delta Harbour. We got a break in about a minute. We got a break in just a couple seconds here, Denver. We want to go down the real estate road. You want to talk about some upcoming guests we're going to have the show, and lots more in that regard. But first, I'll give you some contact information. Reach out to Darren and the rest of the crew. Great bunch of guys, and they'll get your assets happening, hard assets. 1-888-335-8645 and online at deltaharbor.com. Delta Harbour with you. We'll continue Hard Money right here on News Talk Sauga 960. Hey, welcome back to Hard Money. John Scholes here, along with Darren Long. We've been doing this for a very long time, reasonably new here on Sauga 960. But you want to reach out to Darren and his team, I suggest you do. If you're not ready to start investing today, at least have a phone call and get better educated. 1-888-335-8645, deltaharbor.com. That's Harbor with a U. Okay, we mentioned this, Darren, off the first show ever.
here at Hard Money. You said we're going to be not only focusing on just physical assets like gold and silver and other metals to get in your portfolio as part of your investment strategy, but we have upcoming guests. You promised stuff from real estate to classic cars to everything else, hard assets. Really cool. Looking forward to that. Who you got coming up very shortly on the show?
Well, I'll tell you, we've been talking to a few people
Yep.
and developing some ideas here. And of course, John, I want to blow this up, and I want to get people into these assets and certainly give them a chance. I mean, some of these assets we have here at home at Delta with respect to gold and silver. We talk about that on the show. Other assets like development and real estate, I have trusted colleagues that I bring along to the show. The next week's show, we're going to be interviewing Maurizio Londono, who is the CEO of Precious Metals International. They are a metals wholesaler and provide to us a very specific type of account called the bulk bullion account. So if you're on our website and you're looking through our different account types, you'll see one called the bulk bullion account. And this is an individual who has been in the market in gold and silver since 2002. And PMI, Precious Metals International, has been up and operating since the late 90s. And he took over as CEO of Precious Metals International in 2012. He's an expert in the area. We've done lots of presentations with him. You can go to our YouTube channel to see the most recent one we did, where we had him on a webinar and brought him in to speak about the metals markets. He's super excited about this next commodity supercycle. He believes the price of silver has so much room to move. And we've talked a long time about where we think the prices of gold and silver are going, and I couldn't agree with him more. So he's going to be coming onto the show next week, and then we're hoping in the week thereafter to have one of the top 10 REMAX sales agents in Canada come on and talk to us in a very open way about the pros and cons of buying real estate right now as an investment, and talk to us ultimately about the balance that people are going to have to put into their thought process going forward. Now, he's not necessarily a lover or hater of precious metals or other hard assets, but he certainly has opinions about it, and certainly think that he's going to be a good person to have on the show. So we're going to have him on here, and I won't say his name because he has his own show, and he's probably going to be extremely excited about being able to share that with everyone. So I'll save it for when he comes on, and we'll give him some time to talk about that as well. And ultimately, John, this is just about learning as much as we can about hard assets, but it starts by obviously knowing about what we think is the most important two hard assets you could have in your portfolio for wealth, and that is gold and silver. Physical product, we deal in the bar and coin types. And as we were saying before, this is not paper product. This is the physical bullion, not a promissory note, not a certificate, none of that. And we want to put it in people's hands. Gold and silver, something people don't realize, have both been moving up approximately 10 to 12% per year in Canadian and US dollars since 2004. If we go back to 2002 in those really early stages, just before I came into the marketplace, they actually get even better than that. And silver in particular rises up to a 20% average per year, which, I mean, where can you get that? Housing, I mean, in the last year, certainly, but on the whole, we're not seeing that kind of gains every year in real estate. And it's not a cumbersome investment anymore. Metals are liquid. Silver and gold are wealth. They have been forever. They're monetary. They're owned by central banks, and they are used the world over as alternative currencies. And as far as we're concerned, they are among the best ways to diversify your wealth and to grow it. I mean, right now, let's face it, in silver in particular, over the next 60 months, this is a metal which could make millionaires hand over fist like it did in the late 70s when the price went from $5 an ounce to $50 an ounce in less than 90 days. And the time and space, very similar to right now. And we're excited. We're very excited about this.
You know, you mentioned the bulk bullion. We're going to have your guest on next week on the show. Can you describe what that is for people who are interested in that? Because I've heard you mention it since we started the show a few weeks ago. What is it?
Absolutely. Exactly? A lot of people, John, don't realize that premiums on bars and coins can be reflected in the type of metal you're buying. So in gold and silver, the supplier type what the costs of fabrication were, and now in the last 12 months, demand. So if you've got high demand for 100-ounce silver bars, lo and behold, that price is going up. So the premium you pay above what the paper price is, which is how we set the market. So when we call out the price of gold and silver, like we did in the beginning of the show today, when I say the price is $17.90 for gold, that's a paper price. That's the reference price we use to set the market prices for physical product that we sell and that other companies like ours sell around the world. And so ultimately, what bulk bullion does is it A, gives us physical gold and silver. B, we may not want to hold it. We may not want to take it home with us. There's lots of people who don't, because A, we don't want that bulkiness around. We don't want to worry about storing it. We don't want the safety concerns, all of that. So I can still get exposure to it. And C, I may not want to pay those high premiums. So the bulk bullion account allows us to own industrialized bars, a portion thereof or all of them, depending on how much you buy. It allows us to trade in 1 ounce increments, and it's still physical. It's product that can be audited. It can be taken for delivery. You can convert it to other bar types. So if you buy in at day one and you own 1,000 ounces of silver, at day 365, maybe you want to take it home in a bar or a coin form. So you pay the difference in premium at that time. And if you never want to take delivery of it because it's not your thing, or you just want exposure to gold and silver, you don't have to. The best thing is that in addition to having that bulk bullion opportunity, and we'll talk about it, they have collateral financing facilities which allow us to use the metal as the underpinning for additional purchases. So not only could I buy 1,000 ounces of silver, I could double that up and have 2,000 ounces with the same outlay, which is with the market moving, an ultimate way to invest in those assets.
That's going to be coming up, and you did mention your real estate pal from Remax, I believe you said. That's going to be really interesting, because they're in real estate, and this guest of yours who is so far hasn't been named, so we're saving that till next week, has kind of got to pull back the curtain on what they do to expose some reality on this show, and I think that's going to be really interesting, right?
Well, I think it is, and we'll definitely go down that path. I'll challenge him. I'll put him to the test. I would say that if anybody is interested in knowing more about it, we would certainly advise you to contact us, leave us an email, call me directly, use the consultation option on our website. And if you have questions in advance that you want answered about the real estate market, how it can be treated as an investment, I would advise people to go ahead and ask those questions. And quite frankly, when we come back, we'll talk about the last couple of days, what I've heard from my real estate agent friends, and why I think right now is the moment where you have to diversify, where you have to take a chunk of your money, and instead of investing it in real estate, think hard about doing some due diligence and bringing it over to other physical hard assets like gold and silver.
Start out deltaharbor.com. Simple way to do it. 1-888-335-8645. If not, just to have a chat with Darren and his crew, and start down that road as well. We'll continue Hard Money right here on News Talk Sauga 960. All right, welcome back to Hard Money. John Scholes, Darren Long from Delta Harbour, reaching out, deltaharbor.com. As you know, you live in Canada, it's Harbour with a U, because this is all about you, the show, the investments, the opportunity, and reaching out 1-888-335-8645. Let's keep going, Darren. We're talking a little bit more before the break, and we'll continue now. A little bit about real estate, and a recent article you were reading. Want to wake everybody up to this one, right?
Well, we follow a website called betterdwelling.com, and people know, because we talk about real estate, I write about it all the time. I have some very, very big positives that I talk about with real estate, and some very big negatives. And one of the negatives is that a huge percentage of the people who speculate in real estate should not be speculating in real estate. Because it inadvertently is putting pressure on an entire industry, which is making it very difficult for new home buyers and those who have been saving up for a new home to actually make that first home purchase. Like I said earlier in the show, unless you're willing to move to Kapuskasing and start making ice for a living, there is nothing that you're going to get here in this GTA or greater GTA market right now that isn't going to be on fire and out of the norm of reasonable possibilities for the average buyer. And this is an article which came to us from Better Dwelling. Another reason why I think quality assets like gold and silver are important to have. And although it's not the primary driver of inflation right now, it's a close second. They are writing this article and saying, Canadian CPI reported 2.2% rise, which was almost double the previous month's rate. And they are sharply increasing and looking to project higher. We saw building supplies, food items, a lot of clothing items, lots of things impacted by COVID the world over. And they're talking about real estate in this article as being one of the huge drivers for inflation moving forward. And what we are talking about here is a situation where you've had a mass migration from the south of Ontario to the central part of Ontario, or to the near south, let's say, or to the near north region of Ontario. You've had people moving all over the place, and these are not movements that are necessarily increasing their house size. In some cases they will be, but for a lot of them, they're taking value that they've already accrued in their house, equity that they already built, and they're putting it into homes that were more affordable in the regions that are slightly north of the city. And so this has caused huge uproar and a huge problem. And not only that, but everything related to housing is also started to inflate. More recently, we've seen building supplies, right? I saw a funny joke the other day. I saw a car on the, I saw a car on the road, and it was in a meme, and the sheet of plywood was through the front of the car. Thank God nobody was injured. It was just a picture where it fell off the truck, and the guy was safe and sound. But the meme was that it doesn't matter. We're going to be okay. We don't have to put this one through insurance. We just take the sheet of plywood, sell it, and use it to buy another car.
Totally.
And that's inflation for you. That's exactly what's happening right now. And there's a ton of servicing costs related to mortgages. And this article goes on to say that shelter costs are the second biggest driver of inflation right now. And it's finally arrived. We haven't seen this happen up until this point, despite the fact that real estate has been going higher and higher over the last decade, and really since 2008. There really hasn't been much of a gap in where we've gone. We haven't really had much in the way of down years. And Toronto was the only market in the last 12 months that really did experience any downside, the condo market, but that's picked back up. But there's not really too much that we can do to control this. The budget indicated to us, because of the lack of outcomes that would cool off the housing market, that outside of foreign buyers, there's nothing the government's going to do to slow this market down. So this is going to remain running hot, and we expect this market to continue to do so, at least for the rest of the year. But that being said, as I said earlier in the show, the last few days, in talking to real estate agents, there's been a difficult discussion being had, because a lot of people are not understanding and comprehending well enough the fact that there's a bit of a change of tide here in the short term. So over the last 6-7 days, there's been more listings come to market, and that means more availability. The demand for those houses is not what it was because of COVID, third wave of COVID, some restrictions on movements. And so what we're saying now is that if you factor all of this in with the fear of inflation, the threat of inflation, and what it can do to your purchasing power, as we talked about last week's show, you need to have quality assets in your portfolio. Gold and silver represent the oldest known way to combat the threats of inflation. It happened in the 70s. Inflation, double-digit interest rates, double-digit savings rates, and an account was making 12%. Mortgages were up near 22%. Crazy. And imagine if that happens now. The stress test has put those tests to 5%, I think, in the mortgage world. And ultimately, there's a lot of people who could not afford to buy a house right now, not only because they don't have the down payment, because they are not in a position to protect themselves if interest rates go higher. So what we're saying is, take that chunk of money that you were going to use to speculate in real estate, spread the wealth around. Don't dump it into something that might be overpriced, or that might be too heated right now, too hot to run. Put it into some silver and gold.
Yeah. It's interesting too, because I've had this chat with other people in real estate as well. And to your point, there's been this big exodus of people leaving Toronto or couldn't afford it in the first place, because they figure, oh, we're all online now, we're working from home. I'm going to go up to Fort McNowhere, and I'm going to buy a house up here, and then everything will be beautiful. I can work here. Then they're going to realize some of the pitfalls of living up that far north, or maybe the company calls them back into the city to work. The commute is going to be brutal, and lo and behold, they are never going to be able to buy their way back into the city. Once you've left, you are done, unless you've got oodles of cash. And that's going to be a problem. That's going to be an asset. That's going to be an asset nightmare because they're not going to be able to afford to get back in the city if need be. They're going to be in a real rough spot to all your points with interest rates and everything else.
Well, it's going to be a difficult time for many people, John. And that's why I say those exact people who might be able to afford a down payment 2 years ago, they still have a chunk of money. And maybe they have more now because of COVID. They put some savings in the bank over the last 12 months, no traveling, things of that nature. Why not take that money and diversify a little further into something that gives you as good or even better returns than real estate long-term? And ultimately is far more undervalued right now. And that's ultimately what we want to do. We're here to make money for clients. We want them to be positioned in a market that's going to give them the greatest amount of opportunity. And I believe silver and gold do that. And as I said before, there's balance to be had there. If you can afford it, by all means, go and speculate in real estate. But it is not for everyone. It's not something that I think should be prescribed in the way that it has. And these artificially low rates have given us a false sense of security. And ultimately what it's caused, John, is like you said, is the belief that we are flexible enough, honey, to have this change in our life. We can get out of the urban center. We can go to the rural. We can get ourselves a little hobby farm. We can do all that. When in reality, in 12 months from now, John, we know what the truth is. There's a reason why Toronto became the core, why it became the hotspot, why we all wanted to be there, because it's where it's happening. And that's going to change as soon as we get stuck with the needles, as soon as the vaccines come out and we get through this COVID issue. People are going right back there. You know, people that own businesses are going to reestablish themselves in the downtown cores. They're going to tell their employees, hey, I know you like the work from home thing, but it's not the end all, it says all. I need physical people in my office. I need contingency plans. I need to have people working here and doing the job that they were hired to do. So those people are going to get called back to the workplace, and we are going to see all of this culminate into a massive, purchasing power denigration of sorts, where we're going to lose a ton of the value that we had in those dollars that we didn't spend, that we didn't use appropriately, sitting in the bank in savings, or money that we put towards, as I said, very speculative things. So ultimately right now, you've got a chance to buy undervalued assets, to make a ton of money in gold and silver, to own something which is known the world over, which represents wealth. If you own gold and silver, you're a wealth owner. You have a currency, you have something that can be portable and that can be brought around the world, moved around the world, stored around the world. And in gold and silver, there is no better example or time to absolutely diversify your portfolio than there is right now.
DeltaHarbor.com is the website. Go there and do your own homework. Contact Darren and the rest of his team, or make the phone call as well, 1-888-35-8645. This is Hard Money. We'll be right back with a little bit more right here on News Talk Sauga 960. Welcome back, Hard Money. Darren Long, John Scholes, good to have you along with us for the show, educating you about hard assets of a different type. We're talking gold and silver, actual physical metals that you can purchase, you can buy, you can store, you can keep, and it'll be a great hedge as part of your portfolio. The word supercycle, Darren, you brought that up way back at the first segment of the show today. Tell me about it.
It's not just something you buy from Canadian Tire, John.
I was going to go there.
Yeah, you were going to go there. I was feeling it just the way you said it there. I thought that they might be going there.
Supercycle. I feel like I'm 12 again.
Yeah, listen, get on it. It's going to break within the first couple of hours, and then
it's going to be heavy.
The bicycles are very expensive right now. Hard thing to come by. You know,
can't get them. Trust
your own personal experiences. It's not easy to come by right now.
Yeah.
But ultimately, yes, supercycle as it relates to commodities. These are very, very big cycles that happen. The last one occurred between, let's say, around 2001, 2002, and went to 2011. And gold and silver on that ride. We saw the price of gold and silver migrate from basically gold went from 300 to about 1920, or about 530% higher. Silver went from about $4 an ounce up to $49 an ounce and change, which again, 1,100% higher.
Wow.
So, I mean, the prices of gold and silver, despite them doing that during that period of time, they still remain undervalued. And to this day right now, this is the onset of what we believe is the very early stages of a new super cycle. And in gold and silver, that cycle could last the next 10 years easily. And it would not surprise me whatsoever. You're talking about an industry which has seen hand over fist in total change in terms of demand. Who knows about it? You can't go too far anymore without hearing or talking to somebody about gold and silver.
Yeah.
And certainly more people own it physically than they did in terms of paper 10, 12, 15 years ago when we first started this. But ultimately right now, that super cycle is coinciding with the turn of sorts in where we're heading with stock market and things of that nature. And those super cycles tend to be starting or going through the early stages of their evolution, while the stock market and the housing markets are getting to the middle or higher point, nearing the top or a peak. And if you look back from 2002 to 2011, we went through rising interest rates all the way to 2008, give or take. We went through a huge financial collapse. We went through all kinds of recession around the world, a global recession, if you will. And ultimately, precious metals, they certainly were a part of that. But if you look at the period between 2008 2011, some of the best gains, the biggest gains were had between that period of time for both gold and silver. And among other commodities at that time, raw building materials, think of copper and where it went. I mean, nobody thought $4+ a pound. I mean, who could have thought in their wildest imagination? But here you had thieves going into old houses and robbing all the walls of old copper wiring. I mean, palladium, another one, people with catalytic converters, right? Because palladium was starting to take off in value. And that was a metal that we started offering to our clients at 180 an ounce. It's now over $2,200 an ounce. So, I mean, ultimately lots of opportunity there. But when it comes down to the situation we find ourselves in, yes, that super cycle in commodities is just getting started. And the shape of it will be different for all the different sectors, from raw materials to metals, to precious metals, to rare metals. They'll all be different. But with gold and silver, that super cycle is going to last probably in the better part of 8 to 10 years, if not more. And it'll take the prices of gold probably well above 5,000 an ounce, maybe into the range of 6,000-7,000 an ounce. And in gold, it's definitely taking gold towards 100 an ounce, 3 digits, triple digits. That's where we're heading with silver. That's my belief. It's been that way since day one. And I think silver is the most undervalued asset in the face of the earth right now in terms of tangible assets, things you can hold in your hand. It's half the price it was, by the way, John. I know we always talk back about the 70s, but it's half the price of what it was at its January 1980 peak of $52. It's basically half the price. And that to me it's a screaming sign that you should be running, not walking, to investigate this, do your due diligence, and put some of this into your portfolio now.
Well, and I think the one thing that this super cycle that you speak about that's starting now, that the previous one in 2002 to 11 didn't have, was a worldwide pandemic, and that's going to bode well for physical assets. This is going to be a whole new ball game, man.
It's uncertainty, John, at its finest. And we don't know what this we're guinea pigs in a huge science experiment right now with vaccines. And ultimately we have trust, we have faith, we want to get out of this, we want to get back to the norm. But the money that we printed in order to get through this pandemic, I mean, we can't go through it again. You can't tell me we're going to have another year if we should hit recession, or if we should hit some major milestone in the market that changes that dynamic and points us towards lower GDP, over multiple quarters or things of that nature. But certainly the warning signs are all being flashed. That's for sure. We have too much debt. There's no plan in place to cure that debt. We don't have higher taxation on the whole, on the grand scheme. We don't have enough to cover it. And the threat is real. The threat is real. And I think that if you are an investor at this point in time, you have to ask yourself, what's most important? Do I want to protect what I've already got? Do I want to grow what I already have? Do I want to do both? Or do I just want to go crazy and keep speculating and not have any quality hard assets in my portfolio beyond that which may be speculative real estate, which is the most common one people have? I think the answer should be that you want to be balanced, that you want to have some diversification, that you want to be able to still hold your stock portfolio, still hold your bonds, still have some cash on the side in the account. But why not have good quality hard assets, especially when they make money hand over fist? 10% plus per year. Where else do you get that on a steady, hold in your hand, tangible asset? It's not paper asset, right? There's no dream here, John. We're in a position to take advantage of this, and the time to do it is now.
Just a couple minutes to go before we wrap for the day, Darren. Again, just some broad strokes of what you guys are offering. And if people don't have this in their portfolio yet as part of their investment strategy, what are we offering to them?
Well, we're offering obviously direct to home gold and silver. If you want to buy bars, coins, take it home, have it delivered, we take care of that. We offer storage. So if you want to be able to put your product into a secured vault that's insured, where you can go see it, hold it, and make changes to it by phone very quickly, very liquid, we offer that. If you'd like to take that a step further, not only store it, but have it in an RSP, TFSA, maybe an RESP for the kids, or Lira, if you're thinking about retirement, we can put gold and silver into those accounts also. And then finally, as we talked about earlier, the bulk bullion accounts, where if you know something about gold and silver, this might be of great interest to you, because this is the one way that we have built and designed to absolutely take care of those bullion premiums that can be high sometimes when you're buying. And ultimately, that bulk bullion account also allows you to finance up to 80% of your metal being purchased. So you've got more bang for your buck if that's the type of account that you want.
About a minute, and we're a little less than a minute. Again, just quickly tee up who's coming up next week in the show, because this is going to be really cool, pal.
We're hopefully having Maurizio Londono. He's the CEO of Precious Metals International. We'll talk bulk bullion. We're going to talk about the metals markets. We're going to talk about the commodities supercycle a little more. And listen, there's no sugarcoating this. There's problems all over the world. He has the advantage of being able to see globally the big picture. I'm excited to have him on here. He's made a ton of money for our clients over the last 15, 20 years. And he's going to tell you a little bit about how we plug in at Delta to Precious Metals International and share a little bit more about bulk bullion buying.
It's going to be great. Stick around for that show. In the meantime, reaching out 1-888-335-8645 to reach Darren and his crew, and deltaharbor.com. That's harbor with you, deltaharbor.com. And we'll catch you next week on Hard Money right here, News Talk Sauga 960.